Hey traders, this is Christian from Hertz Tribeca Trade Group with your Friday market recap. And wow, what a day! 70 degrees in New York City, and a beautiful, great opportunity to go grab a couple beers at your local beer garden, which I will be doing shortly, and taking advantage of the very nice weather. Also, kind of a crazy shortened market week, and a little bit of volatility, and and then volatility kind of really died down, and I'll get to today's markets. But I wanted to bring up the chart that I have in front is really kind of indicative of what we've been seeing this last couple days. And this is the USMV. This is the minimum volatility ETF. Look at this thing take off. This is an ETF that was very, very popular back in 2015, 2016. I have up here the amount of investment just so you could see what I'm take a look at what I'm looking at. This ETF attracted more assets. I think it was the second or third top gatherer of assets back in the first half of 2016. Just huge amount of money going into this. And if you take a look at the ETF and what this is, and then we're going to talk about today's themes, but just very indicative of what we're kind of seeing here. You got, just a lot of consumer staples, some telecom in here, some healthcare names in here, some utilities in here, which we definitely saw a rotation into some of these names as bonds started to move higher towards the end of this week. And I forget who said it on CNBC earlier on the halftime show. I think it was one of the Nigerians. If I'm misquoting, I apologize. But these sector rotations are so quick in the market that you really have to pay attention. You have to pay attention to the flow, and you have to do homework, chart homework, which is what we do at Tribeca Trade Group almost nightly. I am spending a couple hours and just trying to catch some of these moves. Case in point, look at the utilities this week. Once they got above the 200-day moving average, look out. This was a trade I actually took. I was not really involved in any of the utilities single names until we started to see a little bit of call buying this morning. So I piggybacked on an XLU trade this morning. Right off the bat, this was that about 10 or 15 minutes after the open, we saw a nice position of XLU being bought. For just not this week's, but next week's, and that was enough. By doing the homework and looking at what areas of the market are moving, I already knew. I was like, hey, the utilities have been just ripping lately, and maybe they're going to get exhausted soon, but you can see in the RSI. But I want to play this while it's happening, so I got out of about 85% of that trade today. Into that trade for 50 cents. I bought, what did I buy? I think I bought next week's calls for 50 cents. Took some profits at 65. I was trying to get 70 cents, didn't quite get there in that. But hey, that's a 30% profit in one day. I'll take it. Just continuing with that theme, I talked about this, I believe, in last night's video. Look at XLV. And I'm going to talk about the overall indices in a minute, but look at the move in XLV. Why I look at ETF fund flows and why I kind of meld that with option flow is because that really gave us a good signal a couple weeks ago. Just really big inflows into the XLV healthcare ETF. It was well over $1 billion of inflows that went in a couple weeks ago. At the same time, this was last week, this massive call buyer came in. Now, these were only purchased for about 19, 20 cents. I think I talked about this in yesterday's video, but they were purchased for about, again, between 18 to 20 cents, and they went up to 36 cents at the close. So that's a double since right around Valentine's Day. So, some of these moves you just really have to pay attention to, moves above the 200-day moving average. And then also just a combination of chart study and a combination of watching the flow on a daily basis. And already, when I know I'm kind of hitting on all cylinders is when I've done my studying, my homework, and I know what charts are showing momentum, and then bam, we see call buying in a couple different groups. And then I don't need to really hesitate. I don't really need to look at the chart too much because it's already, in the back of my mind. So really hit a couple nice trades. This week was I would have to say was a little bit tough for me. I had some bad luck. You know, the Tribeca Trade Group members heard me crying a bit over spilled milk. I just, I would call this being a little bit unlucky. I added a trade in Nvidia literally the day before it got double downgraded. So these things happen in trading. It's all about the long-term game. Every once in a while, you're going to have bad timing in trading. Just sometimes as you're going to be a little bit lucky with timing, sometimes you're going to be a little bit unlucky as well. So this week was a little bit tough for me with just bad timing, taking a nice big fat trade right before a double downgrade. So you know again, this happens in trading, and so you just have to shake these things off and have a short-term memory with names where you get every once in a while something just bad happens with timing. But this one, some traders actually caught this for a nice day trade today. The video making a nice move from lows to highs, so finished up on the day. But if you take a look at where this started on the day, it looked like it was going to be another ugly day. $93 to 101. So keep an eye on this name for if you're a day trader. This name is really whipping around a bit. What I wanted to point out was basically almost where these value areas are really crucial for support and resistance. Take a look at the weekly chart. A couple things to note here on the weekly chart is, number one, your reversal bar. You have a shooting star candle on NVIDIA, and and then a couple weeks of moving down, and this was your earnings. So really ugly looking candle on this day. But notice the nice support that we have at 93.32, which is almost where we got to. Also the 20-period exponential moving average. So it kind of makes sense where we found support. I did send this chart out earlier in the day, and all we're doing basically is coming off of overbought levels. Maybe we hang out as long as we maintain this 93, and I know this is now because of the giant move that we had today, but 93.43 is your bogey or your line in the sand. To maybe consider adding some type of position here. Maybe it's even selling put spreads below here, thinking that this gets is held onto over the next couple weeks. So that was a big mover today. Just one note about the major indices. This is what we've kind of been continuing to see is that every little dip gets bought. So personally, I thought we were going to fall a little bit in here between the when I see the yellow line much higher than the blue line. Usually at some point it's inevitable that the price moves back to the 20 period, and then that's usually a good buying opportunity. We're just not seeing that yet, and same thing with S&P. Amazing the buying pressure on the close today. So Q started down about 50 basis points and finished up on the day. Same thing with S&P. S&P, we did not close down yesterday either. So I was thinking that, hey, this is great. We're going to actually burn off some of these overbought levels. Not so much. Both the S&P and Nasdaq are still really bought on the relative strength index, and I would use this word again, very resilient. When you walk in the morning and see that the DAX is down 1.2%, or I think it was at one point around 1.5% down, and when our markets are only down 50 basis points to start the day and then finish in the green, really, really strong. So you have to cut through some of this news, this political news, and the rhetoric about what's going to happen, what's not going to happen. Follow the price and follow where the buyers are. Today was really choice buying or selective buying, I would say, and calls a lot more ETF orders that I've got listed for today. So while the indices are continuing to do their thing, take a look at different names that are just really showing the aggressive call buying. We saw a couple of names that were dip buyers. HPE, we saw a dip buyer in that name. We saw some FL Foot Locker August calls. I thought that was a notable trade that happened. Foot Locker had a really nice day today, really nice earnings report. So somebody's looking for a move, possibly to the highs of 80. So keep this name on your radar. It may not be done today, even though there was a 9% move today. I did not add this position today. Foolishly, I may be waiting for maybe an inside day in the beginning of next week, and also maybe waiting for a little bit of the volatility to come out of the options, which usually takes a couple days. Definitely the day after earnings. But so I'm just going to sit and kind of watch, and didn't really want to add too many positions. Big position in silver, SLV. Look at the in the money calls in October. I didn't even see that was 14,000 at one point that were on the tape, but there may be a little bit more than that. If we have 14,000, so SLV, what can you say? Above the 200-day moving average, I think it's worth a shot. I added this position in October, so I've got a nice little trade on here. Long term, they actually did these in the money, and I kind of thought about this for a minute. Why would they have bought in the money call options on silver? Perhaps because it doesn't move that much. It's not a tech stock, right? So even if we get back to the 1971, we're talking about a $2 move, which again, percentage terms is pretty good. But if you buy in the money calls, they're going to be a little bit more sensitive to they're going to have a higher delta, and thus they're going to move more if it continues higher. So one thing to note is that purple line up there, that's a VPOC. That could act as resistance if we get there. Notice I started off the call talking about XLV. Notice we just took out this VPOC today, so could be a nice place to take some gains today. Sometimes when price action hits these purple lines, these version pointing controls, a pointing control that's never been touched before, it often acts as a magnet. Price wants to get there, and sometimes price fades once it actually takes out that level. So keep in mind, so that's an illustration today, XLV. I wouldn't be surprised if it digests after this. And then keep an eye on this level up here, which is right around 1823, 1824. So I would call that definitely one of the most notable trades of the day. I like these EWZ calls that traded. We typically see a lot of volume, which, call volume is not the easiest to play in EWZ, but we've been seeing, some nice inflows into the EWZ ETF. This is Brazil, by the way. EWZ is the Brazil ETF. You could see over the last 5 days about $250 million of ETF inflows. So there's money that's being added to Brazil. Take a look at what it did the last couple days. It was down 3% today. So what better of a chance? Look at the support right here. I did not add this trade today, but this is something I think definitely, we talked about coming down to the 20-period moving average. If this bounces on Monday, I will probably be taking a long in the EWZ Brazil ETF. Again, this was the big trade, 11,200 March 40 calls. So pretty short dated stuff here. A big open interest, 164,000 on this. So I'll check that name, see if it increases open interest. So I like that trade. I did take a stab at these HPEs on the dip. This worked really well for me yesterday when we saw LB calls, basically bought on the low of the day yesterday, and just a huge rally back in L brands, up 4% today. So, it was not a huge trade I took, but I took that trade for bought, April calls in LB. There, I think it's actually on my recap from yesterday. There it is. The April 50 calls, I bought these for $2 and sold them for $2.50. I think they even went up to almost $3 today. So I left a little bit of money on the table. But when you've got a nice gain like that in one day, so be it. What else? A little bit of buying in First Solar. First Solar was a day trade I was in today. Made some nice little coin in that one today. These First Solar still not at the 200-day moving average, but pretty darn close. And they've got some nice momentum to these names. So keep an eye on First Solar 200-day moving average. They went out. This was, I believe it was March. Yeah, March 40 calls that traded. So that's going to be it for today's recap. Let me just see if there's anything else. There's also a little bit of GLD buying as well. A couple interesting put trades as well that hit the tape. As well, New Skin was a repetitive put buyer as well, but we'll end it there. I'm going to cover, as usual in the weekend video, all of the most aggressive, a little bit longer term natured option trades that hit. I do that total week summary for option activity. I do that on Sunday, so look out for that video, as well as our whole macro rundown of indices and sectors. So stay on the lookout for that on Sunday, and have a great weekend. Thank you, everybody.